Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario on the 4-hour chart where we are looking at a finished wave A or 1, finished 2 or B, and then continuation to the upside in a wave C or a wave 3. Most common target for a wave C is between the 1 and the 1.236 trend-based fib extension taken from the low to the high of A to the low of wave B here, and that is a target between 47.2k and 48.9k, and that is quite interesting because the minimum target for a wave C is above the resistance areas that we have above price at the moment. The first one is the blue box here between 45.9 and 46.7, and then we have the range value area high of this range over here, which is the final bit of resistance at 47k. However, for a wave C, it is very rare to not at least hit the 1-to-1 trend-based fib extension as a minimum target for a wave C, but as you can see, it's above the range value area high. So if price continues pushing here, it does increase the probabilities to look for potentially that 49k high and also fill the monthly gap that we have towards the upside, as on the monthly time frame, we have a monthly gap over here, which was tested once, big rejection to the downside. Now we came back for a second time. You can see that the gap, the low of the gap at least, is at 47.9k, which is inside the target area for a wave C. If price can make it this high, the probabilities are very high that then we move towards the upside to fill the gap to 53.3k. Another thing we have to pay attention to is the 0.618 that I have on my chart over here. As we are looking for a wave 1, 2 locally, we are again looking for a wave 1, 2 and continuation, or even a potential double 1, 2 here, for then a wave 3, 4, 5, 4, 5 to still be expected. But that means that in both cases, we are still looking for sideways ranges in a wave 4. An invalidation for a wave 4 is the 0.618. So as price is moving to the upside, we don't want to see the 0.618 hit. This move to the upside at the moment has the highest amount of volume of this move to the upside over here. So therefore, the highest probabilities, this is a wave 3 structure, and in an impulsive move, we still want to see a wave 4 in a range, preferably at least the length of a wave 2 over here, sideways range, and then make another high in a wave 5 on lower volume. So therefore, what I wrote over here, we have to wait for a range in this impulsive structure. As long as price is moving to the upside on volume, we are just following price towards the upside. Another reason that we then follow price towards the upside as well is because of the daily gap that we have over here. So we have the candle that created 49k, then we had a bigger move to the downside, and then we have this small candle over here, and you can see that the bigger candle to the downside created a gap. Now we have tested this gap once, rejected, moved to the downside, came back, second time testing the gap, ranging here below resistance, but now we closed a candle inside the gap, which does increase the probabilities to fill the gap to the upside to 45.5k, where we also have the golden pocket taken from the high to the low over here. In the bearish scenario, we are looking for a move towards the downside. So here we have a finished wave A or 1. We're looking for a wave B or 2 and then a flat structure, A, B, and then a wave C, before then continuation to the upside. Most common target for a wave B is between the 382 and the 886 Fibonacci, taken from the low to the high of A, giving you a target between 41.8k and 39.1k. Common target for a wave 2 is between the 05 and the 786, 41.1k and 39.6k. This low here just missed out on hitting the 0.382, which is not common to see a continuation without at least hitting the 0.382, so this is something that we do have to keep in mind. If we then look at the flat structure that could lead to lower prices inside the target box that I just mentioned, we are looking for a wave A, B, and eventually a 5-wave structure to the downside in a wave C. Currently, price is ranging over here in the common target area for a wave B, which is taken from the high to the low of wave A, giving us a target area between 44.3k and 45.1k. If we have our wave A over here, then we are looking for a 3-wave structure to the upside in a wave B. As in this scenario, we are looking for a 3-wave A, 3-wave B, 5-wave C. In this scenario, wave B then has to be a zigzag structure in a 5, 3 and then a 5 wave move. If this is your wave C over here, then you can see it is pretty long because it passed the most common target area for a wave C, taken from the low to the high to the low over here for then an A, B and a wave C 3 wave structure. Your most common target is the 1 to the 1.236. The 1.618 is also still common, but anything above is less common. Now it's definitely not impossible because we have seen it at times that the wave C can be incredibly long. This wave C over here in a 3-wave ABC went to the 3.618 trend-based fib extension. So therefore we cannot invalidate this move not being a wave C, but it's all probability. So what we prefer to see, just like with the bullish scenario, is a range, and then the range will give us most of the information. As long as price is pushing, we are not looking for an ABC and a move towards the downside, right? We need to see weakness, we need to see price moving towards the downside, and then we'll take it from there. Of course, I could also put this wave A on the left over here. However, then we look for wave A, B and a wave C. And as shown in the live stream yesterday, it's actually very difficult to put wave A over here and then find a wave B that ends at this low in particular. You can end the wave B potentially over here for then a wave 1, 2, and then we need a 3, 4 and 5, but then you have a 1, 2, 1, 2, 3, 4, 5, 4, 5. So you're likely gonna go above the 1.618 maximum target for wave B, really lowering the probabilities for a flat. So therefore probabilities are better for this scenario to put wave A over here, where we then have a wave W, X and then a Y over here, finishing with a zigzag for then a 3-wave structure to the upside, now ranging inside the target area for a wave B. We are also at resistance. If we look at this range over here, right, we have this range where price had a deviation below the range, came back inside, been ranging around the point of control, moved towards the upside to the value area high. We are also at resistance now, which is between 44.3k and 44.8k. If we then look at the CVD divergences, then we had bullish CVD divergences before price moved to the upside, which means that market shorts were absorbed with limit long orders, helping to push price towards the upside. The bullish CVD divergence here had a target which was this high, which of course played out, and this one as well over here, higher low in price, lower low in the CVD. Target was this high, which also now played out. More locally, we have some bearish CVDs over here. However, in a trending structure, you do have a higher probability of having leading CVDs, which means that even though you have a higher high on the CVD over here, right, lower high on price, higher high on the CVD, probabilities in a trending environment are higher that price is following CVD towards the upside to invalidate bearish CVDs. So therefore, what I'm looking for once again locally is for a bit of a bigger range to form, and then we take it from there, which is something I also then mentioned in the probabilities. If we look at the probabilities here, then on the low time frame, which is the 4-hour time frame, right? When we look at this whole structure over here, theoretically, due to the shallow retracement of this wave B or 2 in the bullish scenario, right, the probabilities would be higher for the bearish scenario based on theory. Reason being, this low over here did not touch the 0.382, which is very rare for both a wave B and a wave 2. However, right, there is not yet any weakness locally on the chart. We need to wait for a bigger range. And on the micro at the moment, here, probabilities would be higher for continuation to the upside. We have a very long wave C, lowering the probabilities for an ABC here locally. And then again, we need to wait for bigger ranges similar to a wave 2, because we are then looking for wave 4s. Not to forget, we are in the middle of the daily gap as well. So seeing proof of resistance and weakness is very, very, very important. I'm not in this business to try and catch the highs and catch the lows. I'm in this business to catch the middle part over here. So I'm looking for weakness. I'm remaining patient. I have my plan, my strategy right with my entry requirements, and so should you. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.